In this morning's U.S. Bank Economic 360, what are the markets telling us about the future of our economy? Well, just this year, we've seen economic softness in both the U.S. and in Europe, slightly better employment trends, strong markets, soft business trends on Main Street, and higher gasoline prices. What a year it's been. U.S. Bank investment analyst Jim Russell joins us now to help sort this out. Jim, so the markets are stronger, the business trends are softer. How can that be so?
Yeah, Brian, it's a good morning. It's a good question, and it's a question that a lot of people ask. A couple of things I think to keep in mind. Number one, markets always look forward. Markets are being priced on future trends, not necessarily today's developments. Another thing to maybe keep in mind, in the S&P 500, 47% of the company's revenues that compose the S&P 500 are non-domestic. So it's very much a global economy. Many on Main Street do not have that kind of foreign exposure, and some of the stronger trends have indeed been foreign. A third point that I would maybe add for our viewers is that the markets are extremely excited about the foreign central banks as well as the Federal Reserve, which continue to keep interest rates low and monetary policy accommodative, which of course is both a confidence booster and a business enhancement as we look forward.
All right, we'll talk more about interest rates in a moment, but first, the first quarter earnings should come out here in the next day or so, the next few weeks, I guess. What kind of trends do you see? What are we likely to see here?
Brian, we're supposed to see, I think, modest trends in the first quarter. Most companies will report earnings up between 3 and 5%. That is down dramatically from what we saw last year as the lingering impacts of both Europe and a slowdown in China are impacting the companies, both revenues and earnings. As mentioned, half of most companies' revenues are from outside the United States. So a modest type of earnings profile. We would expect for that earnings growth to actually increase in the second quarter, third quarter, and fourth quarter. What many people don't realize is that the S&P 500 is at record earnings levels now. Companies in the S&P 500 have never earned more money than they're going to earn this year. And so that is a little bit, again, of a mismatch between what Main Street is seeing and what the markets are seeing.
And we've seen interest rates pretty low for a really long period of time. What does that suggest, and what do the bond markets, what are they telling us about our future?
I think there are a couple things being communicated from the bond market to the investment community. Number one, inflation is likely to remain low. We heard just last week that inflation on a core basis, excluding food and energy, and I understand that gasoline is on the high side of most people's comfort levels, inflation is up 1.9% year over year and likely to move lower as we move through the year. So that's point number one. I think the second point would be that I think there is still an unsettled world. We have a possible military conflict between Israel and Iran, with oil involved, of course, and Europe can also continue to explode on us. So it's one of those things where I think there's a risk aversion in the marketplace that draws people into the bond market by and large. A slow growth component in the United States is also a contributing factor.
All right, Jim Russell, we appreciate you and U.S. Bank.
Thank you, sir.
Thank you.